first of all, thank you so much for your participation. This is the second webinar series of the LEI Legal Entity Identifier. Today's we will learn the experience in United States. But of course, the US is one of the leading countries implementing LEI. So we are hoping to understand what's the current discussion, particularly to leading cases. Ms. Leanne Bigelow, she will explain the situation, how global identifier, including LEI, can be utilized in the US custom. I think this is also quite important because this goes beyond the financial sector. Normally, we started this LEI implementation from financial regulations, but now the application goes beyond the financial regulation. Hopefully, we can learn the current discussion in the United States. Also, Ms. Amy Kabila, she's the managing director of the JP Morgan. She's responsible for the party reference data operations. She has long experience over the data management. And JP Morgan Chase is really the proponent of the introduction of the LEI. And JP Morgan support the customer as a validating agent. So we would like to understand sort of the role of a financial institution to sort of proliferate the use of LEI. And I believe the merit is not limited to the financial institutions. Merit goes beyond. So the role of financial institutions is quite important. So we have two presentations, then we will have a Q&A session. So again, please feel free to type in your questions. Again, it doesn't have to be related to today's topic. If you have some basic question on LEI, I'm happy to answer those questions. Okay, let's move on to the first session. So Ms. Leanne Bigelow, she's the director of the International Interagency Collaboration, the U.S. Custom and Border Protection Office of Trade. So floor is yours, Leanne.
Thank you so much, Mr. Yamadara. And likewise, thank you to ADB for the opportunity to share a bit about the work of Customs, the work that U.S. Customs is doing on business entity identification, to the entire GLEIF team for their ongoing partnership, as well as to all those in the community today who are making time to attend the session. In this webinar, this conversation, I'll be providing an overview of a U.S. federal interagency transformation initiative called the Global Business Identifier Initiative. I'll describe how U.S. Customs and its federal agency partners at the U.S. border plan to test the viability of the legal entity identifier and other widely used business entity identifiers to address some of our core cross-border trade challenges and relay how trade members can get involved in the upcoming Gbi Evaluative Proof of Concept. Next slide, please. So before I go into the details of the GBI, the Global Business Identifier, I think it's important to provide some context on what the customs environment looks like as we approach the end of the first quarter of the 21st century. This will help to frame the drivers behind the GBI and the dynamic challenges that U.S. Customs and our partners are trying to address. The mission of U.S. Customs and Border Protection is to protect the American people, safeguard our borders at and between our 328 ports of entry, and enhance the nation's economic prosperity. So between those 328 ports of entry, we stop inadmissible people and illicit goods. But we also remain the agency with a trade facilitation mission and the agency that collects the second largest amount of revenue for the federal government, second only to the Internal Revenue Service, and we're committed to revenue protection. The U.S. Customs trade mission specifically is to secure and facilitate imports arriving in the U.S., accommodating the increasing volume and complexities of international trade. Our trade partners are focused on creating a level playing field for American businesses, protecting consumers and reducing trading costs. CBP maintains this central focus on trade while enforcing nearly 500 U.S. trade laws and regulations on behalf of 50 different partner government agencies. Currently, the U.S. trades with more than 200 countries, and over the last decade, the volume of U.S. trade has increased by more than 30%. Each day, nearly $11 billion worth of trade, $11 billion worth of trade crosses the US borders. In 2020, despite the disruptive effects of the COVID pandemic, CBP processed $2.4 trillion in imports, equating to 32.8 million import entries and over 28.5 million imported cargo containers. So we're talking ocean and rail and truck at our US ports of entry. This translates to 78,000 containers on any working day. Additionally, in the small package space, so those packages that are valued at less than $800, all the packages that we see coming in the express consignment and mail environment, we processed more than 148 million shipments, and 98 million shipments of those were processed in the truck environment. So you're seeing the diversity of volume that we process. In the midst of all of this, we have a variety of different trade entities. We have 365,000 registered importers of record and 16,500 customs brokers active with CBP. So we really need to keep track of the entities that are bringing in these goods. These statistics bring bold emphasis to the fact that CBP and our interagency partners are confronted with a massive and diverse daily volume of trade transactions and entities, leading to risk management challenges. And crucially for our session today, 99% of import and export transactions described in these statistics are processed, tracked, and monitored and analyzed in the automated commercial environment, the US single window for trade, also known in the trade community as ACE. Since the 1990s, CBP has required importers of record to submit something called a manufacturer shipper identification number, also known as a MID. The purpose of the MID is to provide the US with information on the manufacturer associated with the imported products. However, the MID lacks the data quality, data richness, and uniqueness required to provide the US government and our partners with accurate supply chain insights. It's not unique, often duplicative, and as of now, 30 million MIDs have been issued. The GBI initiative was originally formed as a result of the pain points associated with this MID, and to address key information gaps regarding trade entities importing goods into the US against the backdrop of increasing trade transaction volume and supply chain complexity. Next slide, please. So what is the Global Business Identifier Initiative? It's an interagency trade transformation project spearheaded by the CBP Office of Trade in conjunction with more than 20 other federal government agencies in the US that we refer to as partner government agencies, and from here on out, I will refer to as PGAs. The GBI PGA partners include Food and Drug Administration, Consumer Product Safety Commission, the Census Bureau, Department of Commerce agencies, and the Department of Agriculture. The GBI initiative aims to develop a single identifier that will, or single identifier solution. It's actually a complex identifier, but a single solution that will improve the U.S. government's ability to effectively identify high-risk shipments and facilitate legitimate trade. We want to create a common language between the U.S. government and the global trade community, and not least, improve data quality and efficiency for identification, enforcement, and risk assessments. Ultimately, the initiative aims to improve the U.S. customs import and export processes and increase visibility into the vast volume of shipments that the U.S. receives. Ideally, the optimal GBI solution will uniquely identify legal business entities, their different business locations and addresses, as well as their various functions and supply chain roles. Next slide, please. The current proposed GBI solution will test the operational value of 3 globally used entity identifiers that are each managed and governed by third-party, non-governmental organizations. What a concept. CBP and our interagency partners will test these 3 identifiers and determine the optimal combination to meet one U.S. government needs. The first is the LEI, the Legal Entity Identifier, a 20-digit identifier with more than 30 underlying reference data elements, specific to the ultimate legal entity. Owned and operated by the Global Legal Entity Identifier Foundation, GLEIF, CBP will test the LEI's ability to identify main legal entities and direct and ultimate parent relationships. To date, over 1.7 million LEIs have been issued worldwide. Second number we'd like to test is the Data Universal Numbering System, the DUNS number. This is owned and operated by the for-profit Dun & Bradstreet, has more than 200 underlying data reference elements, and it's currently used by quite a number of our US partner government agencies, as well as the trade community. It's got very broad saturation in the global marketplace. Over 300 million DUNS have been issued worldwide. And finally, the third number that we would like to test is the global location number owned and operated by GS1. CBP will test the GLN's ability to identify precise business locations, their functions and associated legal entities. Over 2 million companies use GS1 standards currently. Individually and collectively, these 3 identifiers are more than numbers. Each has dozens of underlying reference data elements that combine for a wealth of robust business data. Individually and collectively, they also meet the essential GBI criteria of adherence to international standards, including the World Customs Organization Trader Identification Number Framework. Next slide, please. And thank you so much for continuing to move the slides forward. I really appreciate it. We already know that no one entity identifier in current use by global businesses can deliver on the US government's border interagency risk management standards and needs. However, in some combination, the identifiers we test will provide us with who is who clarity and better identification of increasingly complex supply chain networks, authentic ownership and affiliation insights, and be used to strengthen risk management. The identifiers that make up the optimal GBI solution must meet all 8 core competencies shown here. These have been identified by CBP and our partners. These identifiers will be tested during our evaluative proof of concept to identify the optimal combination. Next slide, please. Currently, CBP is gearing up to launch a pilot, an evaluative proof of concept, or EPOC, in the spring of 2022 with volunteers from the trade community. This will allow CBP and our interagency partners to test the operational value of the 3 entity identifiers described previously, including the LEI, and determine the optimal combination. In the current design, the GBI EPOC will operate within the U.S. government's automated commercial environment, the single window, include all three identifiers under evaluation, the GLN, DUNS, and LEI, and it will require volunteer trade participants to submit all three identifiers for the manufacturer, shipper, producer, and seller via the CBP automated broker interface. The pilot will be implemented in 2 phases, representing 2 key components of the US import lifecycle. In early spring 2020, we will launch the first phase of the pilot for cargo release and targeting. Next slide, please. To ensure that the GBI pilot, the EPOC, accurately reflects current trade processes and operations, the design includes 10 countries of origin and 6 product categories, which encompass a range of key trading partners and high-risk, highly regulated products. These categories have diverse US government legal and regulatory jurisdictions. So think of medical devices, think of seafood. There are many agencies that regulate those products, and so potentially, hopefully, will derive benefit from the Global Business Identifier information. Product categories that we will test include those medical devices, seafood, alcohol, personal items, toys, and a category called U.S. goods returned. The 10 countries that you see here are within our original scope. It is always possible that we may expand the scope as we continue to run the pilot. Next slide, please. So what do we expect in terms of benefits from the Global Business Identifier? So we're very interested in understanding who is who. These are business entity identifiers, so we do want that answered. We also want much better data quality, richer, more robust, as I've mentioned before. We want these identifiers to be globally unique so we can truly attach them to individual entities and understand that who is who question. We want the ownership and affiliation insights. We really believe that the legal entity identifier, the LEI, is going to be very strong in this area, and we're looking forward to testing the results there. And as I've mentioned before, we really are going to use this for risk assessment. All of our partners are interested in this activity. As far as trade industry, this is a chance to get in on the ground floor while we are testing, obtain these identifiers and test them for trade's own purposes. It empowers trade to manage and validate their own data, as opposed to waiting on the US government to provide some kind of government managed entity identifier. We also understand these identifiers will provide broad sector coverage, and we feel there will be facilitation benefits for participation. Next slide, please. So interestingly, another significant benefit that the US government and trade might realize from the Global Business Identifier, a Global Business Identifier for trade, is that it may streamline the number of identification systems that are used by government and trade at the moment. As of now, the US government uses more than 50 distinct entity identifier systems. And many thanks go to the Data Foundation and to GLEIF for their 2018 study that highlighted this proliferation of government business ID regimes. Of these 50, more than 50 distinct identifier systems in the US government, CBP has identified, based on common data attributes collected, at least 25 systems that might be impacted and streamlined by the Global Business Identifier. So we're very hopeful. While we can't promise that the GBI will replace other federal entity ID systems, there's a distinct possibility that there will be harmonization, and certainly a hope that further in the future, GBI could lead to further streamlining in these systems. Next slide, please. So just a few of the areas where, as we've refined the GBI initiative, we've been mindful of other major initiatives in the US government major emergent trends in the technology space that synergize with the Global Business Identifier. I'm not going to go into all of these, but wanted to present that these are things that we're looking at. We are very much aware of blockchain and actually have piloted the use of the LEI in blockchain work that we're doing on intellectual property rights. So that was very successful. So we feel that there are synergies here. And we're also very, very excited about how we're working with our 21st century customs framework. That's a very different discussion, perhaps something that we might come back and discuss with the ADB in the future. But there are plenty of synergies between the 21st century customs framework and the GBI. Next slide, please. So what international engagement have we done? That's a very important question. We're speaking today with a very international crowd. So one of the places that we've made sure we have had plenty of engagement is with the World Customs Organization. Very recently, we provided a joint briefing with GLEIF to the WCO SAFE Working Group on how CBP is testing the LEI in the epoch and elsewhere. Members of the WCO SAFE Working Group expressed support to further explore the integration of the legal entity identifier and the trader identification framework that the WCO has been working on over the last decade. So there's great potential to enhance efficiency there. We are also actively engaging the Border 5. So that's Australia, New Zealand, Canada, UK, and the US is the 5th country. The Border 5 is, as many of you know, an international forum that exists to address multilateral customs issues and border management policy issues. So we're working very closely with the Border 5 and actually have something called an expert correspondence group that we run with the B5 to look at trader identification, including the Global Business Identifier project. And of course, international engagement-wise, we are here speaking with all of you today and look forward to your questions during the end of the session. Next slide, please. And this will be our last slide. I know I'm running right up against time here and want to give Amy plenty of time to share with you. So how can the trade industry participate in the GBI pilot? Well, we have something in the US called the Federal Register Notice. This is very important. It's front page news in government policy and regulatory change. Anything that the US government is trying to do that is new usually results in a notice coming out through the Federal Register. So we will be posting very shortly at the end of the summer a Federal Register notice that provides a little bit more detail on how trade can actually apply to participate and volunteer for the GBI pilot. We also have been developing in our automated commercial environment over the last few months, and we'll continue to do that until the launch of the pilot in 2022 so that we're ready to accept the GBI and these entity identifiers in our system. If you have an active interest, I fully encourage you to reach out through the ADB. They have my contact information, and we can provide more information as the time approaches for the launch of our pilot on how to get involved. But it's been a pleasure, and I look forward to receiving questions towards the end. Thank you so much, and I'll turn the mic back to our moderator.
Thank you, Leanne. So let me pass the floor to Amy. So would you want to post the slide? Yeah, in the meantime, actually ADB and WCO has a very close relationship. And I'm sure that through the communication with WCO, this initiative probably be raised. The custom is one of the areas that ADB is supporting. So hopefully we can see more close engagement with you. So Amy, would you want to post?
Yeah, can you bring up the slides? I wasn't sure how I bring them
Okay,
up.
so let me,
I know I said I would step through, but I wasn't sure how to, I thought you'd bring them up, but I guess if you bring them up, you have to click for me, which
yeah,
is
it's okay. That's also fine.
perfectly fine with me. And then let me just arrange my screen here. All right, great. Thank you very much for having me today. My name is Amy Cabia. I'm a managing director at JP Morgan. I manage all of our client reference data globally for our wholesale clients. And I'm going to share with you today why I'm particularly passionate about LEI, why or how LEI is valuable for banks, and how we think LEI can be especially valuable for clients as well. And I want to take you through a little bit of a journey of the evolution of LEI in the United States and what we see happening with it around the world. So I'm going to actually, before we flip the slide, I'm going to start off with a little bit of background about my day job. So LEI is part of my life every day. I run a team that runs matching algorithms daily that cross-reference the GLEIF registry to the JP Morgan data set. And so we are constantly appending LEIs to our records. And this started about 5 years ago, probably first with the CFTC, which is the Commodities Futures and Trading Commission regulation related to derivatives, a requirement to have LEIs for trading. And then that following the CFTC requirement, the MiFID regulation, which is a European Markets and Financial Instruments directive, came into play. And that was kind of like we needed LEI for every counterparty that wanted to trade derivatives in the European area. As a result of that, there was a huge rush to make sure that none of our clients would be negatively impacted by, we wanted to make sure everyone had an LEI so they could trade. So that's when, probably any of you on the line who may be from banks, experienced there was this massive rush to make sure we had an LEI for each client. And one of the things that we found challenging at JP Morgan was, a lot of our clients are asset managers that are trading on behalf of their clients. So a big part of my role is managing or the reference data on these party-to-party relationships. So it's not just, hey, asset manager ABC, it's who are they trading on behalf of? And so we have captured those relationships between parties and have trading identifiers for them. When these regulations came along to put LEI on, to require LEI for trading derivatives, we had to say, well, wait, I'm transacting on a record that is actually representing a relationship between two parties. So which LEI am I going to report? The asset manager who's placing the order with JP Morgan, or am I going to report the principal who's the asset owner involved in that transaction? And the LEI really helped us clean up our data to reflect which ones of our records are actually true legal entities and which records are relationships between two legal entities. So as a result of preparing for MiFID and gathering LEIs and putting them onto our data internally in JP Morgan, that was a great exercise to clean up our reference data. And it was that experience that made me realize the value in having a unique identifier that unambiguously identifies a specific legal entity. It's not just JP Morgan, it's like what specific, in which country and what's the legal form, et cetera. That ability to identify counterparties at that granular level, became really clear the value of doing that. So from that MiFID experience, that's what launched me into being an advocate for LEI. So with that, let's go ahead and turn to the first page. Some of you may have participated in the first part of the webinar where Stefan Wolf, the CEO of GLEIF, spoke about LEI. But just in case not, I thought I'd just give a couple of points on why I think LEI is so valuable. I'm going to start with the fact that it's an open and non-proprietary standard. Because of that, it's for a public good. And so it's not a private enterprise, trying to make money off of selling an identifier. It's absolutely open, non-proprietary data. That becomes really valuable when we start talking about digital identity. And I'll talk about that a bit later, later in the presentation. But it's trusted worldwide. The LEIs are issued by organizations that have been accredited by GLEIF. GLEIF is overseen by the Regulatory Oversight Committee, which is a global set of regulators. So that gives the LEI something special that identifiers that are issued by any sort of private agency or private company can't provide. So those are some of the things that really drive home the value of the LEI as it relates to digital identity. I put a sample of some JP Morgan LEIs on the slide, and I like to point out, and we've got hundreds, but I just pulled this sample, and the row on the bottom is interesting because it shows that JP Morgan or Chase Bank USA is an inactive entity. You can see that from the entity status. And then to the right-hand side, you can see that the LEI registration status is that entity has been merged with another entity. Now, that type of information is really valuable from a data management perspective and a risk management perspective, to have that traceability that, yes, that once was an active entity, it's now inactive because it's been merged, is valuable information that the GLEIF registry provides on all of the entities in the database. Let's go ahead and turn to the next slide. So since this part of the webinar, part 2, is about LEI in the US, I wanted to share that several regulatory agencies and federal agencies have embraced the LEI. If you go onto the GLEIF website, there are over 30 listings in the list of regulations that reference an LEI in the US. So over 30 regulations reference the LEI in the US. About half of those, the LEI is required, and the other half, the LEI is requested. And so I'm going to share kind of a cautionary tale here for those that find benefit in the LEI and want to see more of it, like myself. The fact that LEI is requested does not actually drive significant adoption. It's only where the LEI is mandatory and you cannot transact without it that we see good adoption. And I'll come to this in just a moment on the next slide, but I want to stay here for a second, which is the Federal Reserve has incorporated LEI into many of the regulatory reports that we produce on a on a quarterly basis, and all of the bank holding companies. The rule, it says LEI is required, but if you read it closely, it says it's required if the entity has it. And so here's my cautionary tale about even when a regulation might say it's required, if it has that caveat, it gives an out for entities to not get an LEI. Now, I talked at the beginning about data management benefits of having LEIs, and we're going to talk a little bit later about risk management benefits and digital identity. So we want, as we JP Morgan, we want to see LEIs for as many entities as possible. So initially we were like really, oh, I hope all the regulators go forth with lots of mandates. And we do see mandates coming, like the India Reserve Bank, I may be getting that a little bit wrong, has recently, as April 1st of this year, mandated LEI for large value payments. So we see that, like, you cannot transact, you cannot make that payment without the LEI. That creates a real uptick. We also know that Bank of England is driving towards 2024 requiring LEI for payments for financial institutions specifically. So that's really going to drive adoption. Additionally, China has put forward a roadmap for LEI. So those things are really keeping the momentum going. But I want to share with you kind of the cautionary tale. And now we will flip to the next slide, which is to show that it's really where, and let's go ahead and flip to the next slide. It's really where a counterparty cannot trade or transact that we see the adoption of LEI, strongly. And so this chart tells the story that 75% of LEI issuance has been due to European regulations that have mandated LEI for trading. And that's in particular MiFID, which I talked about earlier, and EMIR, the European Market Infrastructure Regulation. So the chart shows daily average LEI issuance on a weekly basis from 2017 to 2021. And you see that huge spike where counterparties rushed to get LEIs because they knew that they would not be able to trade without them. Since then, we still are LEIs are getting, issued on every day, probably looking at the slide, it's like about, 800 a day, LEIs being issued. But we don't see those big spikes. We're not seeing the big growth. We have a little bit of growth, but not a lot. And as I mentioned, seeing the value of what LEI can do for the banking industry, we wanted at JP Morgan to see what can we do to drive LEI issuance up. So let's flip the page and let me talk a little bit more about those benefits that we see within JP Morgan for the value that the LEI brings. So I mentioned data quality, about really differentiating in our databases which records are true legal entities and which records are representing relationships between legal entities. The LEI has also helped us identify duplicate records that we had. So we're doing matching algorithms, running daily, and we might get a name match, but we'd recognize, oh, you know what? We already have that LEI in our database. That means we must have a duplicate record if we've got two records, same name, potentially same address, and we've already got that LEI. So the other quality benefit was really to prevent or detect duplicate records. Next, the LEI makes it really seamless as a data connector to link to vendor data sets. So we, to enrich our data and for analytical purposes, we're often bringing in vendor data, to the likes of, Moody's, S&P, Bloomberg, IHS Market, various sources to enrich and sort of bolster the information we have. When we have the LEI on our record, and that LEI is also picked up by the vendor, it's a seamless connection to pick up the vendor data. We don't have to have an operations team looking at name matches and saying, was this really the right, is this LLC versus LTD? Is this actually the same record? So this data connector is a really key point with LEI. which leads us to compliance with emerging regulations. Most of you are probably familiar with various resolution stay protocols that came out after kind of the financial crisis and the too big to fail concerns. And we wanted to have orderly liquidation of an institution if it were to sort of go south. So our clients had to adhere, and I'm sure all of your clients as well, had to adhere to these ISDA protocols, which amend their derivative contracts to reflect the their adherence with this new stay resolution. Now we have to, in order, and this is yet another one of those regulations that says if you don't have this adherence, you cannot trade. So we needed to source that client adherence into our data set. And by using the LEI as that connector, we were able to pull in the data set from ISDA and the client adherence and seamlessly attach that to our internal data sets. And because we had the LEIs, that was significantly easier than it would have been without the LEIs. The next protocol that's coming along is the Ibor Fallback protocol. So once again, LEI creating significant operational efficiency in the data management space to be able to source in information on clients that have adhered to that Ibor protocol. Then we've got the counterparty credit risk aggregation, which a nice cross between credit risk and regulatory is the NCMR non-cleared margin rules. We're using LEI to identify consolidated groups among our client base. So our clients have to self-disclose which entities are in their consolidated group for the purpose of calculating initial margin. So we're going to use the LEI to create those consolidated groups within our data. Again, without that, we would be back to name matching from a client saying, here's my information, and then we would match it up to the JP Morgan data. And it's just unnecessary sort of operational overhead to constantly be doing this matching for every regulation that comes along or any other sort of analytical benefit we want to get out of it. So LEI just seems to come in handy again and again. Next, I'll come to fraud detection. So this is where we're really trying to go now, which is let's use LEI in our fraud engines. And let's use LEI in our screening processes to identify bad actors. Entity validation and payments transactions. As I mentioned, the Reserve Bank of India mandating LEI for large value payments. We want to say, okay, even where it's not mandatory, if we can increase get critical mass of LEIs in the industry, it's beneficial for all of us that we can use LEI to validate the sender and receiver in payment transactions. And lastly, onboarding efficiency. This also requires critical mass of LEIs. So LEI doesn't get you off the hook for doing KYC. Like, you still have to do your own KYC. But the LEI helps you with the SIP verification, which is the customer identification profile. Satisfying that is what the LEI can do to improve the onboarding process for both clients and suppliers. So as you can see, like, we just see tremendous value in the LEI, and we want to get more LEIs out there. Which brings us to the next page. Let's flip the page. We thought, all right, how do we, it's valuable for us as a bank. How do we make LEI more valuable for clients? So for a client who has to get one to trade, of course, they're going to go get the LEI. But for a client who is not subject to a mandate, how do we make LEI valuable for them? And the key is that the fact for a client to have a globally recognized identity, excuse me, just giving myself a timer there. For the client to have a globally recognized identity, it simplifies cross-border transactions. And this is like a nice connector with Leanne's presentation, is that more and more agencies, like customs agencies, are going to be looking for these identifiers. And so the a client who's growing their international business, it's beneficial for them to get an LEI. It also promotes financial inclusion by representing the company as a valid, registered global, or having a global identity. And then the kind of what I think is sort of the next frontier with LEI is that it can support a digitally verifiable identity. And this is what's going to power the sort of digital economy. We have to know who we're doing, when we're doing peer-to-peer or point-to-point transactions without an intermediary, we need to be able to trust the entity on the other side. And in order to do that in a digital way, we need to be able to verify the identity of that counterparty. And this is where we get into a topic that I'm sort of a novice in, but there's a whole series of public key, private key, connections that allow us to verify who is on the other, side of blockchain transaction. So the LEI can be used as the root of trust in that, or is the root in the chain of trust, because you have, and this comes back to the very beginning, the first slide, where the organization that is, the organization issuing the LEI has been accredited by GLEIF, which is a nonprofit organization overseen by regulators. So it gives it that sort of safety and security. So you've got GLEIF at the root, accrediting the LOUs to issue LEIs. The LEI then is getting issued to a company. That company can then issue verifiable credentials to their employees for to perform a role on behalf of the company. And every company has authorized signers, or you're authorized to pay an invoice or authorized to engage in a contract. So that ability to establish digital credentials for employees is something that can be valuable to firms of all sizes. So we see that as a big selling point of why LEI will be valuable for clients that are not subject to a regulatory mandate. So let's turn the page, and this will be the last page. So in order to kind of achieve these benefits that we see for JP Morgan and the benefits for the clients, we were very excited to become a validation agent in the global LEI system. GLEIF introduced the validation agent role in September of 2020. And you're probably familiar with registration agent. A registration agent simply passes data along to the LOU who issues the LEI. A validation agent verifies the identity of the legal entity first, and then sends the data to the LEI issuer. So the LEI issuer doesn't need to verify the identity again, which is actually what's happening. Every time a bank is onboarding a client, we're verifying the identity of that client. If they have to go get an LEI, then they're actually paying someone else to verify their identity again. So there's duplication in the system. The validation agent role eliminates that duplication. And therefore, it lowers the cost of LEI registration. It makes it easier for clients to get an LEI. So it's a nice service for our clients. And we see it as a mechanism for increasing LEI issuance and getting to that critical mass where we can reap those benefits that I talked about on the prior slide. I will wrap up there. I'm sure that's plenty of plenty on LEI. Last page is just the disclaimer. Happy to take any questions from the audience.
Thank you. Thank you, Amy. So let's start the Q&A session, but I guess people still need some time to raise the question. So allow me to ask maybe first Amy. Well, the last meeting, we also received the question that how I can get the LEI. And particularly you explained that the role of the validation agent. So let's say one company A wants to have LEI. How JP Morgan can support company A? What would be the difference? I mean, you just explained, but could you give us more kind of a real example?
Yeah, absolutely. So to be a validation agent, you actually have to be approved by GLEIF. And you also have to enter into a legal agreement with an LEI issuer, because essentially the LEI issuer is relying on the bank, the identity verification processes performed by the bank. So they need to be comfortable that our processes are sound. And validation agents, this process works because we and banks are regulated institutions. So the LEI issuer can rely on the fact that we get audited by our U.S. regulators on our KYC processes. They look at our identity verification processes. So the first part is to be able to provide that to our client, to provide the LEI for our client. We had to engage in a legal agreement with an LEI issuer. Then we created a client consent letter because the client has to authorize us to get an LEI on their behalf. So what we've done, is when in situations where the client needs an LEI so they can execute a trade, they're quite happy to say, yeah, thanks, please get it for me, and they're happy to sign the letter. For clients who don't have to have an LEI, and we're trying to sort of say, hey, there's these other benefits, they're a little bit more skeptical. So we are looking for ways to make it as seamless as possible. Like we'd love to say, have a checkbox, like, we'll get an LEI for you unless you check this box or unless you opt out. We haven't gotten to that point yet, but that's kind of what we see as the ideal state, where every time we onboard a client, we'd like to be getting them an LEI. To answer your question very tactically, operationally, what happens is we're gathering information from the client during the KYC process, and then we use that to verify identity, and then we pass that information on to the LEI issuer. And it's the very same information that we're requesting from the client for KYC that the LEI issuer needs. So it's really not any additional burden for us. I'll be transparent that right now we're kind of still building up the capability, and so we're doing some of this manually, but the intention is when we get to scale, we can have an API that would go between JP Morgan and an LEI issuer, so that really it takes out any operational burden. But it's been quite straightforward to be able to do this for clients, and we've gotten good feedback. They're very happy with it. And I'll just share a quick anecdote, which was one of our clients was listing securities on an exchange, and it was in the news that they were at risk of being delisted because they didn't have an LEI. They had to have an LEI to list on this exchange in Frankfurt. And so we were able to very quickly say, oh, we can get that for you. And they were delighted. So that's, something we're looking at now, like as we take companies public and we're going to list them, we should just make getting an LEI part of our service for, advising a company going public. So I'll leave it at that.
Yeah, thank you. I guess you pointed out that there's no extra cost for financial institutions, because anyway, when you accept your customer, you need to do the customer due diligence. So it's just kind of it can be recognized as a kind of additional service to the customer. So no extra cost, customer is happy, and of course for your operations, you are also happy because
Yeah, yeah.
you can improve the efficiency. So it's really can create a win-win situation. Okay, I have one question in the Q&A box. Well, that's related to the Archegos. Well, the recent incident, Archegos and LEI. Well, I'm not quite sure how LEI was utilized among the regulator to identify the Archegos transaction. But do you have any comments on the, how LEI could play or did play or couldn't play in relation to the Archegos incident?
Yeah, I'm not familiar with the Archegos incident.
Well, this is the kind of the transaction. Actually, to be frank, this is not really the problem of LEI. I mean, the authority should collect all the transactions attached to the Archegos, because when it comes to the OTC derivative, all financial institutions must report together with LEI. Of course, the financial institution can know the transaction as only as an counterpart. But the problem was the Archegos had a huge transaction with the various financial institutions, Nomura, name it. And then suddenly they failed to pay the margin. This, I think it's, well, if it's really the kind of standardized transaction, it's not a part of LEI, I mean, the derivative reporting together with LEI. But if involved in OTC derivative, yes, it's a part of the mandatory reporting. But it's not the responsibility of a financial institution to identify all the potential hidden transaction, but the regulators must and should be able to identify. But challenge, I would say, was the transaction carried with LEI at that point was limited. And probably the reason that even the regulator couldn't capture entire transaction of Archegos. Having said, there is a merit. Well, I don't know what happened after, but if the resolution of Archegos happens, unlike previous global financial crisis, the resolution process could be much faster, because now each institution knows the counterparty exposure against Archegos. Previously, under the global financial crisis, it was so difficult to identify the counterparty exposure because there were some hidden transactions. Even one financial institution couldn't consolidate all the all the sort of counterparty exposure. So that was really the lesson. So the LEI provides the identification to each legal entity, because that was really the lesson from the global financial crisis. I hope I answered the question. So let me ask Leanne, in relation to your initiative, you now have you identify 3 global IDs as a kind of the pilot study. Is there any possibility that 3 of them is going to be recognized, or you want to pick only 1 out of 3?
I think at this point, and I mentioned this, but I'll stress it again. There's really, in customs, because we have the facilitation mission as well as our security mission, and the import safety standards of the U.S. government partners we work with are such that there really isn't one identifier currently offered that gives it all. Mm-hmm. So the LEI is fabulous when it comes to that legal ownership entity identification, but it doesn't provide the location, the specificity of locations such that it could be used for logistics purposes, which is something that we see in the global location number managed by GS1. So while we have to test, and we're holding our conclusions until we have the results back, it is our current hypothesis that it won't be one. It will be either a combination of, it'll be a combination of 2 of the 3, and we don't quite know what the 2 are going to be at this point.
Yeah, well, actually, that is also my expectation. as you said, there's no single ID which can solve for everything. And probably that is not suitable because, for example, if we want to identify the legal entity, but for taxation, often a permanent establishment, PE is important, but the PE is not the legal entity. But for the case of taxation or even sometimes the custom, that kind of a facility may be important. But again, in terms of the resolution, there's nothing to do with the PE. So there are different objectives, and the ID needs to be solved for the different objectives. And the combination of a key ID is going to be probably the good solution. I have one question. Okay.
I just wanted to mention, we're seeing such an interesting convergence. So even while we're thinking about this global location, global business identifier, and something that it's a customs will collect it, but we have through our trade system by design the ability to share with. I know I threw a lot of numbers out, but the current count of federal U.S. government agencies that use the automated commercial environment and take transactional data out of it for imports and exports is currently 52. We have 52 partner government agencies that use the data that CBP collects. So it's not just CBP by any means that will be benefiting from these numbers. But what we're seeing while we're working out this pilot, we're seeing many other agencies such as the Department of Labor. Recently, they, Amy, I think this will be music to your ears, as part of the US-Mexico-Canada agreement, for a producer to comply with something called the labor value content requirements, producers must provide CBP by regulation with a unique number, an identifying number. And we haven't mandated it that it be the LEI, but we are strongly, and so is Department of Labor, strongly recommending that this be the LEI. So, we're getting there. We're seeing that agencies are picking these numbers up. And when we ultimately do, as customs, as the kind of central collector of the information, determine what the solution looks like, there'll be much greater adoption, I feel, across the US government by that point.
Okay, thanks. One question. This is the sort of the ADI for emerging markets, and what's the benefit, and also the if there's no relation, if there's no direct financial transaction with the United States, is there any point to having ADI? I think that's the question. Let me respond first, and I hope that Amy, maybe you can add the answer. Well, first of all, for the OTC derivative reporting, this is globally agreed. So regardless you are in the United States or Europe, as long as you are the counterparty of US financial institution, European financial institution, or Japanese financial institutions, you must have ADI. Otherwise, they will refuse to make an OTC derivative transaction. And that's a kind of a tricky part. So if you want to conduct the OTC derivative transactions with the financial institution, of which jurisdiction mandates the reporting of OTC derivative, you must have ADI. And so regardless whether in the emerging market or US or Europe, that is the financial regulation that you need to follow. And that is the reality. And that's why just Amy mentioned that because of this regulatory requirements, we see huge increased number of the LEI application. Well, for ordinary corporates, what's the merit of ADI, particularly in emerging market? Well, I would say every jurisdiction have a corporate registry, but unfortunately, the corporate registry functions quite limited or not designed for the global trade or not for the digital use. LEI from the beginning, it is designed to be used for global transaction, global sort of identification need, and more importantly, it is designed to match with all the digital use. So you don't need to carry the paper, whatever. So the first webinar, I think Stefan mentioned the possible global use case, like even the ESG or whatever, when it comes to the identification of entity together with the authorization, LEI can sort of support those transactions without paper. So we need to sort of design all various transactions, financial transaction, trade, whatever, custom, so the more suitable to the digital age. And ID, corporate ID, entity ID needs to be designed for the digital age. And LEI is designed for that purpose. So that's why that the ADB, we are also pushing LEI to push through push the digital transformation. LEI is going to be the fundamental key infrastructure to be implemented. So that's why it's important for emerging market as well. Any additional comments, if any, Amy and Liam?
I think you said it well. I see one more question, if there's time for another question.
Yes, the one question is to Amy. So your client use LEI to prove the resident status and the proof of sort of statutory requirements, particularly in taxation, because tax resident certificate may be required by the tax authority. So is there any case that LEI is used?
Yeah, it's really up to each local jurisdiction to, they set the rules on what they will take as evidence, as legal evidence. So from my perspective, the process that the identity verification process that looks at your legal address and your physical address, and in the GLEIF database, it would say your headquarters address, that'd be your physical, and then your legal address. I would consider that sufficient evidence that that is where that entity was incorporated, and then that is where that entity is physically doing business. But I don't know, my guess is each tax jurisdiction has their own set of rules as what they allow as acceptable evidence. So hopefully we get to a point where it is reflected, oh, you have an LEI and I can see in the database that this is your legal address and this is your headquarters address. I would hope that that's trusted by these tax agents, or I shouldn't say trusted, but I hope it's accepted by these tax agencies.
Okay, thanks. Well, it's already close to 10 past, but I found that one more question. So to Amy, so does JP Morgan require funds from emerging markets that invest in the funds managed by JP Morgan need to get the LEI? So I suppose the this does not necessarily the funds may not be involved in OTC derivative transaction, but as a kind of a global custodian, do you request your customer, particularly asset manager, to get the LEI for your operation purposes?
That's a very good question, and that's an area where we could drive adoption. I'm not aware that we require it. Like, we've had a lot of conversations about, could we just require all of our customers to get an LEI? Like, why not? And then the salespeople go, oh, they might not do business with us, So hence why we want to be a validation agent and just say we can get it for you. But I can look into that and get back to you to see if there is anything happening like that. But to my knowledge, I'm not aware of us saying like you cannot invest in our fund unless you have it. I haven't seen that.
Yeah, well, I think as you said, the regulatory mandate is also one of the drivers. So if the custom requires it, or tax authorities requires it, or financial regulator requires it, and that's really going to be the driver. Actually, ADB also support the regional forum for the tax authorities. And I'm also closely communicating with the ADB colleague supporting the tax regional discussion. So hopefully we can create more awareness, and then we can push further use of LEI. Again, it's not something for the regulators, again, as Amy and also Leanne explained, actually the user will benefit. And that is quite an important point. So hopefully we can move to the kind of a much more digital friendly financial, kind of a public infrastructure. So let me conclude today's webinar, and the next webinar is tomorrow. So I hope that I can show. Yes. So the tomorrow 4 p.m. Manila time. Well, Leanne, Amy, the final word from you.
Leanne, you could go first.
Oh, thank you, Amy. Just really thrilled to have had the chance to speak to all of you. And I think my final word is convergence, because while this is an audience that is mostly attending to financial services, this is the LEI and other these legal identifiers that we will be testing at customs. Anticipate that they will be sector agnostic very shortly. And as Amy said, the digital that digital identity, the applicability in the digital space is crucial. So thank you again.
Thank you. So Amy?
Just to wrap up, I mean, thank you for everyone who's shown interest in the LEI and participated in today's session. It's good to see we had the same number. We're ending with the same number of participants we started with. So I'm happy that folks found the information interesting enough to stay on. So thank you very much for having Leanne and me.
Well, thank you, Leanne and Amy, joining in a very late evening in the US time. Thank you so much. And thank you so much for all participants. Let's meet again tomorrow, this time 4 p.m. Manila time, to discuss the European experience. Thank you so much for your time. Thank you so much for your kind participation. Thank you.
Bye now.
Bye-bye.